Moving higher in the 21st century. Hard-working people working hard for you and me. Moving higher time and time again. Through the years you'll find us here. Moving higher.
Hello and welcome to Moving Iron Podcast, Tax Moves with Glenn Birnbaum. Glenn is with Sikich, and Glenn has been on the podcast several times, especially during this whole PPP thing. Might recognize Glenn from what used to be Heindel Banhort, and they've merged together with Sikich, and now they've become the same great service that you've always grown to love and know. So, Glenn, how you been, buddy?
Good, Casey. We just wrapped up the October 15th deadline, so that's always a big day for tax people to finally hopefully put the tax season to bed. So
you had quite the adventure this tax season, didn't you?
For sure, yeah. Working from home and all the new laws and stuff, but keeps you employed, I guess. So. Yeah.
It does do that. All right, so let's talk about a few things here. So you sent me some stuff here on some new forms that are coming out. A lot of it revolving around PPP and a few other things that have been out there, and what this looks like and how all these things work. So let's start with the Form 3508S. That is the PPP loans for under $50,000 and what needs to be done there. So let's start there, talk about that a little bit. And first off, let's lay out the groundwork here. So there's two different categories, right? There's those that got over $2 million and those that got under $2 million, correct?
Right, yep.
And so how those break out, or how you report those two things, those $2 amounts, whether you're on either side of that number is dynamically different, correct?
Yeah, well, I mean, basically the SBA has indicated that anybody with a loan over $2 million, which we believe would include, maybe related companies that might, individually not have a loan over $2 million, but together, combined, it's over $2 million, that there's going to be some sort of review or even like an audit process on these to really look at the making sure that, the borrower is eligible for the PPP loan is I think, one of the principal things they're looking at. So if you're over $2 million, there's definitely going to be a higher scrutiny on things. But then there's always been talk about, well, what if you're under a certain threshold? Maybe things will be, super simple to apply and receive the forgiveness. Okay. So that's where some of these new forms come in.
Okay, so let's talk about the 3508S.
Yeah, so we've had the regular 3508 and the 3508 EZ for I think since the end of June is my recollection. But this 3508S came out in early October. And basically that is for borrowers under $50,000. That it's an even simpler form than the 3508 EZ form. And basically you don't have to worry about computations regarding if you had a more than 25% salary reduction or wage reduction for an employee, or if you had a headcount reduction. You're basically exempted out from those two rules that were designed to, basically make sure you didn't, I guess, take the PPP money and lay off, all your people or just cut everybody back because you were trying to, maybe I'll try to keep my head count high, but I'll just cut everybody's payback. Mm-hmm. My experience is, I don't know that happened to anybody that I'm aware of. But so this S form just makes it easier that you don't even have to do the calculations to see if you had a 25% pay cut or this headcount reduction. You just are automatically okay. But they still do require you to fill out a form and, answer some questions and put down the dollars you spent on payroll and rent and those type of things. So It's not quite as, there was talk about like a rubber stamp kind of concept that, hey, if you're under 150,000 was the buzz. Under 150,000, you just be a rubber stamp, You don't even have to really worry about anything. So they dropped it from 150 to 50,000 and then made it a little more, a few more requirements than maybe people thought. So that's where this S form comes into play.
Gotcha. Okay. All right. So
I believe there's, there's around 5 million of these PPP loans, roughly. a little over that, and I think like 3.5 million, almost 3.6 million, are under 50,000. So it covered, from a quantity standpoint, it's going to cover a lot of them.
Right. Okay. So the first payment is due 10 months after the end of the covered period, correct? So
yeah,
did they ever settle on that? Is it 8 weeks, 24 weeks?
You can choose your 8 or your 24.
Okay.
The reason why I want to mention this 10-month thing is probably, I don't know, it's been a few weeks ago now, but there were some banks that, were kind of sending out notices that, hey, here's when your payment is due. And it really wasn't when the payment was due because they've changed the rules so many times, right? And if you weren't kind of following things or maybe your software wasn't updating. So generally speaking, it's going to be, the latest it can be is going to be 10 months after the end of your covered period. So,
okay.
So we've still got quite a bit of time. And so just know that. But yeah, it was a story a few weeks ago that maybe a few banks had kind of, erroneously sent out maybe the wrong when the payments start. But the loan document, the thing is, Casey, the loan document would have indicated that. It wouldn't have said, hey, your first payment is due 10 months after. It complied with the rules at the time. The loan was issued, probably in April. So it's really, the banks have a hard time. And then legally, how do you work that? So yeah, just know that if you don't apply for forgiveness, because you're waiting, it's going to be 10 months after the end of the covered period. And a lot of people's covered period might have ended here, the end of September, sometimes a little bit before that, but somewhere in that time frame. So still a number of months to go before it's really going to have that first payment. And obviously, hopefully most people, now that it went from an 8-week covered period to a 24-week covered period, it's pretty likely that you're going to get 100% forgiveness, right? I mean, that's the goal of this. So you don't have to worry about a payment, obviously, if it's 100% forgiven.
Right. Okay. So talk about, this is a question I have. So when you do your 2021 or 2020 taxes, right, and you're sitting looking at everything, this loan, and you get this forgiveness money, did they ever decide how they were going to incorporate that into your tax structure?
It's still, well, that's a good reminder. So in the law, it was very clear that the forgiveness of the loan, would not be considered taxable income. In other words, kind of the cancellation of the debt is not considered taxable income. And so everyone was, okay, yeah, it's not, this money, that's received is not going to be taxable. But then the IRS came out with a notice 2020-32, that said, okay, well, yeah, the loan's not taxable, we'll buy that. But then any expenses that you paid, with that loan money, under this rule, an existing rule in the code, they think, hey, those expenses aren't deductible. So then, if an expense isn't deductible, effectively, it makes the loan taxable. So potentially we're kind of right back to, no, the loan is taxable. But there's been no further guidance on this. Congress is maybe supposed to fix this in one of these, new bills. That's obviously not gone anywhere here. So we're still in this kind of holding period of, what should you do if you're looking to make tax estimates, or how do you do your planning? But at this point, I think you've got to start getting your expectations that, hey, I may have to pay income tax on this PPP loan money. I mean, we still have some time. Hopefully something will change, but it's kind of a backdoor way to making the loan taxable.
So it is, but it isn't, is what you're telling me, Glenn.
Yes. And there'll be, there'll be lawyers and, people that are definitely going to, contest this. I mean, it'll take several years to run this through the courts, if there's not clarity on this. So we're still, waiting, but we are advising clients that, hey, just be prepared. It may be something that we do have to show it as income. At least that's the IRS's position. And then, the other thing with it is there a timing question about, well, if I don't apply for forgiveness, maybe I can deduct the expenses in 2020 because I haven't actually received the official forgiveness. And then, in 2021, I might have to pick that back up as income, or maybe I have to amend my return. And so that's kind of a timing question, right? And the IRS has not provided any more guidance on that kind of timing question either. But, it's, I mean, if you're an accrual basis taxpayer, and we've talked about tax methods over the last couple of years, Casey, if you've incurred those expenses in 2020, there may be a position that says, hey, it doesn't really matter when you officially receive forgiveness. We're going to treat those expenses as non-deductible. So that's definitely an open item. Now for a pure Schedule F farmer that really didn't have any employees, no wages, and you just received the loan based on your Schedule F income. If you remember that, there was some question about how that works for self-employed people. They said, hey, you're going to look at your Schedule F income, or, for non-farmers, your Schedule C income. A little bit uncertain, but there's really no expense you're paying, right, Casey? It's not, and so a lot of people believe, well, hey, a Schedule F farmer that has no wages, they got a pure PPP money that was, the max loan was about $20,000, that there's probably a decent position. Again, you got to consult your tax advisor here, right? We're not giving tax advice, but I don't have to spend money and pay my employees in order to get that $20,000 forgiven. It's just kind of like automatically forgiven based on my prior year Schedule F. So there's a possibility that, certain taxpayers, the PPP money may not be taxable, which probably isn't the fairest thing, right? I mean, you'd think it should be consistent across taxpayers. So Congress has got a few things to look at to try to kind of cure this, if they so desire. So,
yeah,
probably more than you want.
We know how that's going to work out, Glenn.
Yeah.
So it's going to work out well for everyone involved, I'm sure. All right. So let's talk about a couple other things, just because we're at that point of the year here where guys are getting their 2020 stuff kind of rounded up for as guys sit back and start taking a look at what they've harvested and start talking to their accountants about moving forward with some different tax strategies and what have you. There were multiple payments that came out in 2020 to help the ag industry along as we limped through this coronavirus thing. So you had MFP payments, you had PPP, you had what's the other one, Glenn? I'm drawing a blank here. CFAP. I don't know why I can't remember that. That's the easiest one to remember. But I can't remember that one. So you got those. You get all those things kind of lumped together, and they smash those things together. What are the tax implications of those payments, and as far as profitability goes?
Well, I mean, number one, they are taxable payments, and it's not like you can. We've talked about this over the years. Crop insurance is something. There are ways to possibly defer the payment, and even if you receive the insurance money in 1 year, you can push it off till the next year if you can show that that's how you normally take your grain sales. These you can't do that with this stuff, so this will be taxable. The number one thing is just try to get your books caught up, right, and know what your current cash basis income is. Most farmers are on the cash basis. But then, what I always try to stress is where it's possible to really have a good sense of what your inventory is too, right? Your harvest,
right?
If you finished harvest or close, because you kind of got to look at the big picture and not just, if you're carrying over a lot of grain and things and you're maybe nearing retirement, as an example, hey, do I want to possibly try to spread out, the income a little better? Now there are ways with farm income averaging to do that. But, you want to have the full picture and not just a part picture. So certainly just number one is just get your books up to date and see where you're sitting at. And don't forget about, these payments. And then, we'll probably talk about this maybe on the next podcast, after the election here is, what might the future be bringing in terms of tax rates, and so that's always a consideration. But particularly this year is, what should you do from an income tax perspective? Certain states, here in Illinois, there's something going to be on the ballot regarding a constitutional amendment to change the income tax from a flat tax to a more of a accelerated tax where the higher income people will pay a higher rate in that. So that's a consideration. Obviously you got the prospects of the federal rates going up. Something we haven't talked about a lot, cases, even just estate tax things that I believe the estate taxes now it's the exemption is $11.7 million. Just came out yesterday for 2021, $11.7 million per person. So it's pretty large. It used to be $5 million per person, and and it's been indexed for inflation. But they pretty much took the $5 million and doubled it to $10 million, and so the $10 million became 11.7. But we're seeing, we do some business valuation work at Sickage, do quite a bit of that, and we're seeing some people looking to maybe do some gifts of closely held stock and things to possibly take advantage of this higher exemption, because there could be a concern that the estate tax would go down. The exemption amount would go down, which means you would owe more estate tax. So it's going to be a pretty busy next couple months here, with all the potential, for changes, and obviously, there's a lot of money being spent, of course, as well, with the government. So how are we going to repay these debts, right? So higher tax rates, higher taxes in general. So that's certainly something that I'm expecting a lot more discussions about, particularly after the election, is should I be doing some gifting or that type of thing. So we'll be busy.
Short answer is probably yes, Glenn. I'm just good thing they haven't talked about. Biden hadn't talked at all about what he's going to do with taxes when during this campaign here. So,
right,
goodness, there's going to be some good reasons to listen to Moving Iron Podcast Tax Moves Glenn Birnbaum if things start to change here. So yeah, there's going to be plenty of stuff come down the pike, Glenn. It's going to be a rough 21 might be about like 20 to 20 when you start looking at things on paper.
It could be, it could be real interesting.
I hope not, though. 2020 is bad enough. All right, man. So let's talk about so you have on here 1040 instructions. What's that?
Maybe just one other quick thing on the PPP. This just came out over the weekend. Is we talked about that $2 million threshold, and it appears in a filing that the SBA had that there is going to be a couple new forms, 3509 form, which is going to be some sort of what's called a loan necessity questionnaire. And so no one knows, at least I don't know of anyone that knows actually what's going to be on that form, but presumably it's going to address, again, the eligibility from the start. And so there's a questionnaire for for-profit borrowers, that's the 3509, and then there's going to be a questionnaire for nonprofit borrowers, 3510. Now, they're only expecting about 50,000 of these forms to be completed. So, it's not going to, be very many out of the over 5 million, but just something to be aware of, that there is this new questionnaire out there. So,
Is it like, did you need the money? Yes or no? Is that kind of the questionnaire?
Yeah. And that's what the question is going to be. Is it going to be, probably some qualitative things? Are there going to be some quantitative things, right? Ratios and things.
Right.
So we'll see. But yeah, there have been some of the instructions come out. This can kind of be somewhat of a big thing in the tax world, is when they issue these drafts, and they're just drafts at this point. The 1040 instructions, the personal tax return instructions came out last week. I think the partnership, the Form 1065 tax instructions came out the week before. Nothing really huge in there. A few little things about kind of a complicated thing with tracking tax bases in a partnership. Maybe one thing that I'm sure we've talked about is with qualified business income and the 199A deduction, the 20% deduction. I'm saying the same thing here. But basically, that a charitable donation, that is made from a partnership or an S corporation, some sort of flow-through entity, that this deduction now in the new forms, the IRS is saying they're kind of agreeing with everybody that this deduction does not reduce your qualified business income. So a charitable, now this is kind of weird. It's like, why, hey, wait a minute. I want a deduction, right? Typically you do, but not for this purpose, because, right, the higher your qualified business income is, the higher the net income from your business is, the greater that 20% deduction is. So
right.
The IRS in 2019 on the form said, well, no, a charitable donation should actually reduce your business income. And there was a lot of strife about that. But now this year in 2020, at least in the draft version, they've, you can compare these things, and they've taken out that line. So fairly minor point, but that was kind of a big deal for the 199A purposes.
Gotcha.
Just a reminder on the 1040 that this is a new thing, is that for the first time, at least that I can recall, there's going to be a $300, what we call above the line deduction for charitable donations. So normally, you'd have to be able to itemize your deductions, meaning you have to have sufficient, mortgage interest, state, local income taxes and charitable donations to exceed your standard deduction, right? And then you could really deduct your donations. Well, for 2020, kind of a CARES Act thing is they said, hey, we're going to let you deduct $300 above the line. So it's basically kind of like the $250 teacher deduction. If people that have teachers in their family or whatever, you kind of get this deduction of $250. Well, here it's going to be kind of the same thing for donations, and it's just $300. There was some thought, is it going to be $600 for a married couple? No, they kind of clarified that it's just $300. So that was something that was kind of good to see in black and white. But other than that, instruction is pretty uneventful. But it just reminds us that we're coming close to next tax season. So
it's always around the corner, isn't it, Glenn?
It's always around. Yep, there's always a deadline somewhere.
That's right. That's right. Well, good stuff, Glenn, as usual. Anything else you want to throw out there about this before we shut it down?
I think that'll cover it.
All right, Glenn. If folks want to reach out to you and get your opinion on things, or just overall what Sikich can do for them, what's the best way to do that?
Yeah, it's just best to call our office. We're still in the same place we've always been, in East Peoria. Phone number is 309-694-4251. Happy to talk. You will get somebody from Sikich answering it, our receptionist there, but then it'll forward on to me if I'm working from home or wherever I'm at. So it'll forward to my cell phone. So be happy to talk to anyone. So.
Right on. Well, Glenn, it's always a pleasure, man. I'm Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram. That's where you'll find the latest editions of the Moving Iron Podcast as they drop. Also, check out movingironllc.com for the latest information about the Moving Iron Summit coming up here in Nashville, Tennessee, January 20 through 22. There will be a whole litany of good speakers and things going on there, so check that out. Also, all the information there on how to register for the meeting as well as book rooms. Check out Global Ag Network and the great podcasters there. Check out the Dryline Farmer podcast and all the Brent and Landon as they do their comedy routine here through the day. Keep you guys entertained and as you are out in the combine or wherever you might be. So with that, I am Casey Seymour with Glenn Birnbaum. Let's go move some iron, folks. Out.
Moving higher in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here.